Let's go to Pick and Save. I kind of missed out on Walmart, but Pick and Save, I had been in the stores in Los Angeles. They had 2 or 3 stores there. And I could see that this was a very unique kind of store because they were buying overrun merchandise that they could get from the manufacturer, 10 cents on the dollar, or things maybe had some minor bug with the product. They could sell products cheaper than any place I'd seen, and they were pretty busy. I'd even count cars in a parking lot, and there'd be 45 or 50 cars in a parking lot. So I was pretty aware of what was going on in this company. They had a unique way of buying. They only bought overrun merchandise or damaged merchandise, but they'd sell it at an unbelievably low price. So people were really going there, and we got started on that in the very beginning. In fact, on this chart, we show a perfect cup with a handle in, it looks like July of 1979. And I had been buying that stock in the year before that particular base. In other words, you don't even show the first base that I was looking at. So this stock just kept going up and building base after base after base, and it was because they had sort of a monopoly in that type of operation. In other words, there weren't a whole bunch of other people doing the same thing, so you could go to Pick and Save and get something cheaper. A little kid's shoes for $2 or $3 or something, and normally it'd be $5 or $7 somewhere else. But it was the way they were buying their merchandise. So this was one of our biggest plays that we, I think, bought this stock and had it for 6 or 7 years. I never hold anything for 7 years. But what happened is you'd buy it coming out of a base, and it'd muddle its way on up and build another base. And I'd buy some more and go up and build another base. It just kept building bases. How do you stay with the stock and not get thrown out? Well, there are 2 things here. One is you better know the product. And I've been in the stores. I knew they had a unique situation. You could get products cheaper there than anywhere else because they were buying a carload of something that some manufacturer wanted to get rid of, and they were getting it at a big discount, things of that sort. And you have one product in there, and it'd be gone next month, and you wouldn't see that product again for a long time because of the way they were buying distress merchandise or whatever you want to call it. But if you bought coming out of a base, and in this case, the first base almost doubles. Maybe it goes up 70, 80%, and you build another base, and you're coming out of that. Now you've got a cushion. So you can handle a stock different if you're way ahead than if you just started and you're barely ahead a few points. If I'm ahead, I'm going to buy more, and if by the time I get into that third base, if I've already doubled my money, I have more leeway to give it more room because they can take some of the money away. They can't take it all away. So a lot of it has to do with when you're finally right, because you're going to be wrong several times. In fact, I was probably wrong on 3 or 4 stocks before I bought this one. But now it's really right, and I'm buying more and more of it, and I'm buying the second base, the third base. And now if I'm up over 100%, I can let it correct 10, 15, 20%, and it's not the end of the world. And this stock did that. It came out of that first base in 79. And then in 1980, it came out of a perfect cup with a handle. It had 3 weeks tight, another chance, and it had another base coming out in March of 81. And then it ran up, and it went through a long, long sideways movement. And that was, it looks like 3, 6, 9. That was at least a year and a quarter, back and forth, back and forth. And I think I may have sold a little bit, which would typically be the highest price stock. If I bought some very high, I would cut back a little bit and then sit with all the lower price stock. And I sat with a pretty big majority all the way through that. And finally, when it comes out of a base, I start adding to it. But I'm already ahead more than 100% before I'm adding to the stock. Now, the only reason I could sit through that one was I was way ahead, and also I've been in the stores and I knew what was there. And I knew that they were doing all right and there was no problem. In fact, I used to count cars all the time, and people were always in there. You buy a whole bunch of stocks, and finally you buy one that's turning out to be a real big winner, and you've had it for a while. How do you figure out when to sell that? Well, the easy answer would be say, well, it has a climax top, I'm going to sell it, period. But most of the time, they don't necessarily top that way. I think the answer is that If you've been in a stock for several years, you know how it moves pretty well, and you are in a position to judge if something is acting a little bit different or if it's very late in the game. I think that Pick and Save, it had doubled and then doubled and then doubled, and it was one of the biggest winners we've ever had, and I think it was a 6 or 7 year run. But the last time it built this long base, and when it came out of it, it triples. And in that latter part of the tripling, it would start correcting a little more and rally up at new highs, but correct again, and then rally up and then correct again. It was acting a little different. And I don't remember at the time, but something was telling me that it wasn't clicking the same way that it had behaved in the prior 3 or 4 years. So that's an advantage of a stock that you know well enough, and you've been through so much, you know what is a normal base and what's normal action and what is trudging action. And we did sell that into this period where we're talking about selling. And after you doubled in price, it had one base and then a base on top of it and a base on top of it. But it was struggling and having tripled coming out of a prior base. But it was sold somewhere in there. Part of it, I think, was just market action, because I don't think there's anything wrong with the company at the time. That does bring up something. I like to understand the product, but normally I never would talk to management of a company. I rarely ever would do that. And all the years, probably maybe talk to 2 or 3. But on Pick and Save, I'd owned it for several years, and I had quite a bit of it. At one point, I had said to myself, well, maybe I ought to just go out there and talk to the guys running the company, because it was a LA-based company. So I went out there and talked to them, and you got to remember now, I'm not used to doing this too much. So I talked to the treasurer of the company. I don't remember whether I went out there twice or once, but one of the individuals I talked to seemed like they had gotten really very carried away with themselves because it had done so well and all. When I talked to the treasurer of the company, I asked him a little bit about the president of the company. And he looked at me kind of funny, and he said, well, you should ask him that question himself. But it was the way he posed the question to me. It sounded a little funny, like there was something going on. And I did leave that little situation feeling that there was some dissension going on, and that did influence me. It's funny how people don't realize how they give away something because it's the expression in your face or a few choice words that might, and they're not going to blurt something out. But if you're careful, you can begin to sense something's a problem here. But I don't like to do that and be influenced, because I remember one case where somebody came in town that was the head of a company, and he sounded so great and so wonderful and everything sounded so good, but it really wasn't quite that way. So I was always a little bit suspect talking to somebody, because the facts are there. Either the sales are there, the earnings are there, the product's good or not. And that's what you've got to look at. So you don't really have to visit a company, and the average investor has just as much opportunity as anybody else, because they can look at the earnings and sales and the profit margin, and they can look at the product of the company, and plenty of information there.